Alphamin and the Bisie mine looks to be back in action. Their stock is flying overnight. Obviously, they're not trading on the ASX. They were up 28%. Tin on the LME fell over 8% last night, and that is a pretty hefty move for a commodity. Unfortunately for the tin barons out there, it was kind of in the wrong direction, right?
The screens are green. What's going on? It's Thursday and the market's back up again.
We're back,
We're back. Jonas.
Been looking at the watch list a little bit, mate. Just refreshing.
I actually wasn't.
Seeing that beautiful, beautiful green.
I honestly wasn't looking at the watch list too much today, mate. But what a volatile market that we are in. It is kind of crazy to think of the intraday, well, the single day movements both ways in the last week that we've had on the stocks that we follow.
Could not agree more. It's endlessly fascinating. Could read sort of day and night about this stuff, and yeah, the implications for all the companies around the world. We today are going to be chatting about Alphamin. So the tin barons out there are going to be happy to hear that, although some of those tin barons might be more disappointed than others, depending on what side of the alley you sit. And then AGC, gold, no doubt.
Yes, no, just playing a bit of catch up on Gold Road and Gold Fields, and having a bit of a stab at what we reckon might happen next with them.
I'm interested, Ali. I'm following that one closely, and gold is all the rage. And with all this gold stuff going on, Ali and JD, if you need a crew that delivers people and gear faster than you can say, "Where's that IT we ordered?" just call KCA Site Services.
These guys are stacked with talent and tooling. We're talking about 38 underground ITs in the fleet with plenty more on its way.
Plus, mate, a shiny new underground Agi and a Normat charge wagon. That is not a fleet. We're talking about an underground army here. Did someone say 140 metre grader? That is arriving this month. It's probably already here and ready for hire.
KCA has more people, more reach, more resources. Whether you're staffing up for an underground blitz, a surface crew, civils works, they will find the right fit before you even finish asking the question.
That takes mind reading capability, mate, and I know that they've got that. Adam Wilson, he knows what it takes to run a smooth site. So if you need good people, good gear, and zero drama, just call KCA. Jonas, what is going on in the world of Alphamin?
Let's talk about tin, guys. I'm excited. Alphamin and the Bisie mine looks to be back in action. So it's been a little while since we sort of spoke about this sort of stuff, but their stock is flying overnight. Obviously, they're not trading on the ASX. They were up 28%. So that left them sitting pretty at 77 cents, which is a lot better than it was just a few short weeks ago. If we kind of put it into context, guys, before conflict broke out in the eastern part of the DRC, the stock was trading at about $1.10 Canadian, traded all the way down to 75 cents as the concern sort of grew and grew, and the unrest in that part of the world kind of stepped up a notch. Then the mining halt happened and the stock fell into the low 40s, as you can kind of see on this 1 year chart. On the flip side, if we look at the other kind of major tin player that is listed on the ASX, MLX, they are now down to 52 cents. So they are, over that sort of past couple months, their chart kind of is the inverse of what's happened at Alphamin, given they were trading up at 70%. And that kind of downturn today is tough in the context of a market that is up kind of plus 5% broadly.
Ding, ding, ding on Metals X before you go too far, JD. But yeah, I guess a lot of the MLX holders were buoyant amid what looked like a bit of substantial amount of global supply that would be offline for an unknown or undefined period of time, and now that's clearly coming back into the market faster than anticipated.
And what's happened with the tin price as well, sort of in reaction to all this too?
So clearly a bit of frothiness in there, Ali. Tin on the LME fell over 8% last night. And I mean, in the context of the moves we saw around the world yesterday, it wasn't even one of the biggest, but that is a pretty hefty move for a commodity. And unfortunately for the tin barons out there, it was kind of in the wrong direction, right? So the metal traded below US $30,000 a ton from a high not that long ago of about 38, getting close to $39,000 a ton. So that squeeze was kind of short-lived that we saw over the last month or so, but obviously it's not the last chapter in a super fascinating commodity. And it's sort of interesting to see, and we sort of learn more about it every kind of day, the way these commodity markets have a way of reacting to disruptions. it makes for a really interesting broader conversation, right? Because tin is obviously not the biggest metal market in the world. It's relatively small, and there's a few countries and a few companies that have pretty outsized roles. And I think it's worth a bit of a conversation because there's plenty happening in Myanmar, Indonesia, Malaysia, and then you've got this broader context of a trade war that really hits electronics demand, which is a sort of substantial portion of end demand. But if we start with Myanmar, you've got talks about a production restart with the mining ban being lifted there. And then you've got this earthquake, this kind of horrible event that interrupted that about a couple of weeks ago now. It still seems like the supply from that part of the world will pick up. It'll take a few months to sort of ramp up given the nature of the operations and what needs to be done there and the kind of opaqueness that comes from that part of the world.
We often, because we like mining stocks and we like commodity stocks and all that sort of stuff, we get very excited about the prospect of squeezes. But the thing that I don't know if we always do very well is appreciate how responsive supply can be amidst high prices to actually come online. And there's often in those moments like a lot of talk and a lot of conjecture about how long it will take to bring on new supply. But I think we tend to overestimate that time as opposed to underestimate that time. Which certainly played out in the manganese kind of trade of last year when Gemco went offline. And I don't like the numbers that people have put forward for how long it's going to take the Myanmar mine in Myanmar that's in the WA state there to come back on. Like your typical analyst will say 6 months, but then you speak to traders and they're like, yeah, nah, 2 to 3 max. So.
For sure. I definitely underline what you've said there. And if we go around the world and see what else is happening in the tin market, you've got Indonesia, which has been underperforming as well of late, but things have picked up. If you look at the kind of Feb numbers, they were a doubling month on month. So that's kind of more supply headed to the market. And then Malaysia, some kind of interesting and like wild events, to be honest. There was an explosion at a smelter.
Oh,
That there's some pretty gnarly photos that came out of it. The company that holds that one is the 5th largest producer of refined tin, and their stock fell 12+%. Pretty kind of wild stuff there at Putra Heights. It was the natural gas pipeline that exploded, and it makes for some pretty horrible kind of photos, and speaks to a kind of tightness in potential supply, given that kind of refining capacity will be down for the foreseeable. They came out and admitted it, but they didn't really speak to any kind of details. Understandably, it's very kind of soon into that one. And the overlay of the trade war is very interesting. So no surprise to anyone that we saw the tariffs being paused around the world, except for between China and the US. But that's pretty important, right? Because that particular market is one of the biggest kind of directional electronic trades in the world. If you look at the products that actually go from China to the US, heaps of them are electronics. So 100+ tariffs is where we're at today. Who knows where we're going to be in 1 month, 2 months, 3 months, but that hits the demand side of the equation quite a bit. And like a lot of the points we've just kind of mentioned there can be interpreted in a couple different ways. I think people will have kind of nuanced views about a lot of those things, but I think all that's to say it's a super interesting market to watch.
so what did Alphamin have to say about all this, JD?
Yeah, they came out with a couple paragraphs, Ali, and I'll kind of summarize it here. They announced there's a phased resumption of operations there, and there's been a withdrawal of the insurgents in that kind of nearness to their operations. So the insurgents are heading back eastward, and the company kind of gave the indication that these insurgents are 130 odd kilometers away. They didn't really specify what a phased operational restart actually means in terms of output. They sort of said that they are adequately supplied with consumables and spares, but I think that's a bit open to interpretation. Maybe they are adequately supplied for a phased restart, but they're only going about it that way because they don't have enough to fully get ramped up straight away. I don't know. Maybe they do, and it's for different kind of reasons. They obviously want to keep their finger on the pulse with everything that's going on in and around the mine there. But we'll see how long it kind of takes for them to get back up to full operations. They did say that Q1 production was 4.2 thousand tonnes. So this is a mine that did 17,000 tonnes last year and was sort of guided to do about 20,000 tonnes this year. And they also added that they sold 4,500 tonnes over a period that kind of extended into Q2. So that kind of stopped a day or two ago. So it actually does seem, although you can't kind of definitively say because they didn't give any profit numbers to it, but it seems they actually might have made a bit of money from this pickup in the tin prices because they said their sort of export logistics weren't actually interrupted from the mine's care and maintenance, which is pretty interesting to see.
Care and maintenance for a month, back on, tin price is higher. Happy days. What's the latest with the actual dynamics of the conflict?
Yeah, these are evolving to say the least. And obviously we spoke with a couple of people when we were in that part of the world not too long ago. It's hard to say that anyone's kind of an expert on this. I was kind of struck by how many people that spend time in the DRC and the difference in views that those kind of people had. But I guess we can kind of collate all the stuff that we've read and heard over the last little while. The DRC has been working really hard to attract Western nations, namely the US, to come and do kind of minerals deals for the riches that they have under the ground there. But there is a super kind of long and complicated history, not just in North Kivu and Rwanda, but more broadly there. And it kind of speaks to why Western nations have been actually pretty hesitant to get involved in the conflict. Regardless, you can see the DRC pressing ahead with this minerals deal with the US, and the senior African advisor from the US was in Kinshasa last week. That kind of followed a proposal that the DRC put forward. And adding to that, something I kind of noticed and heard, and maybe you picked up the same as well there, mate, was that people in the DRC, they were pretty keen to have other companies from nations other than China come and do business in the country. And not necessarily a knock on the Chinese, but it is very concentrated in ownership of assets there. And I think for diversification's sake, they would be interested in having companies from different nations come and work in their country. And that's what the US is trying to do. They don't want to come in as a government there. They want their companies to come in, private companies from the States, and do deals in country. And interesting to see they named Monono. They named other assets like the ones that belong to Chemaf currently, who have a deal with Trafigura over some of those assets. So we'll kind of see what happens on that space. With regard to the kind of conflict itself, the US government actually asked the rebels to move 150 k's from the mine, kind of back towards Goma. And they were in contact, it's kind of reported, with the people at Alphamin to encourage them to restart the mine. So this was kind of to facilitate negotiations that are going to happen between Rwanda and the DRC, and that the US sort of added to that. They don't want to directly be a part of these kind of conversations, perhaps sort of facilitate it, and hopefully that kind of sees a peaceful resolution in the interim.
Oh, there's a lot of complexity to this one, and yeah, I mean, you can only really scratch the surface in our own commentary, but there's like an importance that the Rwandan, like, military plays in a lot of different parts of Africa, and that may have informed why the West was apprehensive about kind of coming in at an earlier stage. And now that minerals are on the table, all of a sudden you get kind of some US involvement. And on the plus side for Alphamin, it hopefully enables a smooth restart and no conflict in that part of the world. So shareholders would be happy.
Yeah, definitely agree, Matt. It's a long time kind of in the works, and a whole host of different kind of views and perspectives and emotions for why we've seen what we've seen over the past little while.
Doesn't it highlight just how fragile the tin market is? Like, this is an operation that was like forecast to do, what is it, like, but a little bit less than 20,000 tons this coming year.
Yeah.
And
so we're talking kind of 6% plus of global output.
Yeah, and you can just see how much that sort of rippled through that, not just the equities but the underlying, and it surely wouldn't have been enough time to actually go through inventories and have proper like price response. It was more kind of the speculative response in the LME price, I thought. But regardless, very interesting to just see the fragility in that system.
Hard to get a solid read on those inventories. There's I'm sure that played a big role in what they've got in there in China, but it's not the most openly available information to go and find out, right?
Yeah. Ali, before you go into the details on the latest with Goldfields and Gold Road.
Yes.
On the back of our chat with Headley last week, I actually thought I better brush up on my knowledge on some of those gold junior stocks that might have their time in the spotlight in this gold market. Headley, of course, is a big shareholder in Saturn Metal. So I was flicking through their investor deck, and after they raised $23 million last week, they show this slide. They show where they're going to be putting some of that money to work, including 4 holes to step out their deposit. But you see that yellow hole there highlighted?
Oh, yeah.
That is an 800-meter planned step-out exploration drill hole. That is massive.
Wow. That's huge.
Do you need a hole drilled so deep it gives Jules Verne a panic attack? Well, call the legends at K-Drill, experts in RC and diamond drilling. These guys aren't just punching holes in the dirt. They're actually the drillers being trusted with the 800-meter diamond hole for Saturn. Can you believe it? That's
nice
them.
one.
That's not a drill rig. That's a lightsaber for the crust. And who's leading the charge? None other than Ryan O'Sullivan, JD. Geo say he once sniffed a rock and correctly guessed its assay.
Wouldn't put it past him.
Rhino, mate, he is the lieutenant. He's part driller, part rock whisperer. Rumor is he doesn't even use gyro tools. The rods just know where to go when he puts them in the ground.
Mate, he once hit target depth within 1 centimetre on purpose. His rig alignment straighter than anything. It's just straight. And if you want it drilled right, drilled fast, and drilled by a bloke who probably drills in his sleep, call K-Drill.
Go K-Drill.
All right, Ali, what's going on with Goldfields and Gold Road?
I thought I'd do a bit of a catch up since you guys sort of last spoke about it a couple of weeks ago, as a bit of a refresher from when we saw Goldfields had sort of lobbed an NBIO to acquire Gold Road, but Gold Road had rejected it. So just sort of see what's happened since that time. That was on the 24th of March. That all
24th, yep.
Came out, and what we reckon might sort of happen going forward.
What have you been paying attention to?
So the first interesting release sort of post that was a letter to shareholders from Gold Road. That was on the 27th of March. So that was a few pages long, actually, and it sort of laid out some further context on the proposal from Goldfields, Gold Road's engagement with Goldfields, and their sort of Gold Road's rationale for the rejection, and some sort of key information that Gold Road raised in the letter as far as the rationale for rejection included sort of the usual things you'd expect. So they were sort of saying the proposal materially undervalued the Gold Road portfolio, so not just the Gruyere JV, but their sort of 100% owned Yamana and other assets. They thought the proposal was opportunistic, sort of from 2 angles. So that proposal sort of came just after that underperformance in Gruyere in the March quarter, and before also shareholders could sort of properly assess the Gruyere underground potential, sort of amongst a whole host of other things. So then, what do we see? 28th of March, we see some underground drilling results.
Better help those.
At Gruyere.
Better help the market understand the underground potential.
Yes. And then about a week and a bit later, on the 8th of April, so this week, we saw a Gruyere underground exploration target. So
with a scoping study.
So, and I'll get to that. That was interesting, that part of it. So the underground exploration target, Gruyere, they sort of put as 1 to 1.5 million ounces, ranging sort of from 1.2 grams to 1.47 grams a tonne. And mind you, this is on a 50% basis. So this underground exploration target, you could probably think about it as it's a step before a mineral resource. So it's quite, conceptual in nature.
More inferred than inferred.
Yeah, or more inferred than inferred, exactly. So, and that was derived, that exploration target, from the results of a Gruyere underground scoping study, which Gold Road confirmed in that release on the 8th, that it had now received and reviewed.
I didn't know you could do a scoping study on an exploration target, Ali. We're getting into the real limits of geological and financial confidence here.
Yeah, so, and we'll get to that. So then they sort of highlighted in the release that like the next steps would be now for the Greer JV to commit $26 million for a 60,000 metre drill program sort of beneath the Greer open pit to basically improve the confidence in a potential underground operation. So, that might be, wrapping a resource reserve around it, PFS, that's more earmarked for next year. Then the day after, the 9th of April, yesterday, there was a clarification announcement. So that, as you sort of mentioned, Trav, the original announcement on the 8th had some operational and cost assumptions from this Greer underground scoping study, which have now since been retracted. Gold Road asked investors to place no reliance on the retracted information for any investment decision concerning the company. So why is that?
Convenient.
And I sort of had a look, and it's perhaps because these scoping study assumptions that were mentioned in that announcement are working off a conceptual, mining or processing inventory, whatever you want to call it, which appears to be largely based on inferred resources, exploration target ounces, i.e. more low confidence conceptual ounces. Perhaps that's why they had to retract it. And have a look at this picture here from the Gold Road's announcement on the 8th. So this is sort of like a long section of Greer, and they've sort of colour-coded it by ounces that have been mined, different resource classifications, and also the exploration target as well. So you can also see there's for the YouTube viewers, there's a black outline, which is the scoping study stopes outline, and that sort of encapsulates the underground exploration target that's in grey, some inferred resources which are below the open pit reserve in yellow, and some smidgens of indicated resource in green. But the point being that most of that black outline is in those sort of lower confidence type ounces. Not to say they won't get there eventually, but that's just the reality at this point. So you do see ASX pool companies up on things like this from time to time, but unfortunately you can't sort of delete the previously released ASX announcement. So that even though they've retracted the information, that information is still technically out there in the world.
And there's at least 2 research analysts who've used the cost and production numbers that are in the retracted table to run a DCF
hypothetical
to
scenarios.
value it. So it's certainly, makes its way to inform the market about potential value. To that extent, job well done. They've done what they wanted to do. And I think they were clever about it too, Ali, because the big question is, why didn't ASX pull them up for this on the way in? Like this, a lot of companies get pulled up on the way in trying to upload some form of announcement that is non-compliant in some way, shape, or form. The study that went up, it didn't have an MPV or an IRR in there, and I'm sure they probably had some guidance about what ASX's like checklist is of things that just get flagged on the way in, and they were clever about not putting any of them in there, and then but they still put enough in there to give analysts in the market an idea of what this could be.
Yeah, because there was no sort of outcomes. Yeah, as you say, Trevor, there's no like MPVs, IRRs, that sort of thing. They were more so purely sort of operational and cost assumptions.
If you've got OPEX, CAPEX and production, that's enough to build a DCF.
Pretty much. But in any event, so that's sort of what's happened in the last couple of weeks, interpret that as you wish. But in any event, where are we now? So next week is the De Grey Northern Star scheme meeting on the 16th of April. So assuming this gets over the line next week, which all accounts sort of seems like it will, Gold Road will have a pretty big chunk of Northern Star shares coming their way quite soon. So the expected implementation date of the Northern Star De Grey scheme is around the 5th of May, which is, only a matter of weeks away now.
Truth be told, if you wanted to interlope though, you're gonna have to buy those shares off of Gold Road before that, or before the record date for whenever the scheme is.
Yeah. So
whenever the meeting is, yeah.
So
it looks like a done deal, like
it's getting pretty closer and closer, right? And in Gold Road's letter to shareholders, which we mentioned briefly before, in that letter sort of indicated that a condition of Goldfields MBIO that they put forward was for Gold Road to hold the De Grey or Northern Star shares, whatever they happened to be at the time, until Goldfields' acquisition of Gold Road completes. But in that letter, Gold Road sort of explains that they want to retain the flexibility to hold or divest those shares at an earlier point to maximise value for their shareholders should they choose to. Whereas that sort of condition doesn't really allow them that flexibility at this stage from that MBIO.
Interesting.
So it's something for Goldfields, I think, if they were to put forward a revised offer, something for them to think about as far as the offer price sort of in general, but the consideration structure and perhaps reframing some of those conditions around that.
I imagine it'd be negotiable. I think what they've done is they've look, here's the basis of our valuation we've come up with. They're thinking through the tax considerations of them actually probably having to sell the De Grey stake. Then they've got to pay, what is it, like some $150 million in tax. So for them to reach whatever the share price offer was of their bid, they're thinking about, well, I don't want to, I think I'm getting something worth this, not this.
Yeah.
Potentially.
And the other thing as well, so, okay, with this underground scoping study has been sort of received and reviewed by Gold Road. We saw the underground exploration target for Greer released. So we've got a little bit more colour now on the underground potential at Greer, albeit it's still at quite at high level, given the sort of quite conceptual nature of, exploration targets. And admittedly, there's still a lot of drilling to do, MREs, like resources to be proven up, study outcomes, all of that over the next 18 months to fully appreciate this underground potential in more detail.
Do you think that's fair? Like, do you think it's fair for Gold Road to want to avoid being taken over for 18 months until the value of the underground is demonstrated to the market, or do you think it's kind of immaterial enough that that's kind of like a weak excuse?
I don't know. This is sort of a question I was grappling with myself. It's like, at what point do you sort of make that determination of, is the status quo sufficient enough to assess or reasonably assess the full underground potential? Is it is it now? Is it when all those things come out? That was a question I was sort of asking myself, to be honest. And look, admittedly, Gold Road and Goldfields have now got this sort of scoping study in hand. So, internally, they've got a bit more information there to make the appropriate assessments. But the other question I sort of asked myself is, how far away is the realisation of that underground potential? So the current Greer open pit reserve life goes out to 2032, according to Gold Road's recent investor preso. And it's probably reasonable to assume that there'll be some further, resource to reserve conversion between now and 2032. So for argument's sake, let's call it 10 years from now, if an underground operation is viable, they start from then. What's the net present value of that underground potential, today? And therefore, how material is it? And it's, publicly facing, it's sort of a bit hard to say. But in addition to that, something I sort of learnt today, or probably didn't appreciate as much, is in addition to any potential value from these underground operations being developed at Greer, I think you also need to consider the value of the royalty to Gold Road. So Gold Road has an uncapped 1.5% NSR royalty over Goldfields' 50% share of JV production. Now, that's not in place or hasn't kicked off just yet. That kicks off once Gruyere produces 2 million ounces. And that milestone is expected to be passed next year, 2026. So for context, as at the end of last year, Gruyere had produced 1.53 million ounces. So it's getting close.
Getting close, a couple of years more, and the royalty kicks in. Yeah, I think that royalty is a bit of a, I reckon it's super valuable, like not in the context of the market cap in a very big way, but yeah, I mean, you're talking about this sub-level cave underground potential that the operation has. This thing's going to be producing for at least another 15 years, probably another 20 at least, kind of thing. Maybe it keeps kind of going. So the value of that royalty is it's a very attractive royalty to have.
Yeah. So and therefore
That is super valuable, I reckon.
Yeah.
Like,
Yeah.
that is like, this is a big scale, can get up to, if they can get it right, 400,000 ounces.
It's not a royalty that has development risk associated with it. Like this is a mine in production. The royalty just hasn't kicked in yet.
Those cash flows are going to come soon.
And
Totally.
that's why, and that's, I guess, the other reason, we're talking about this underground potential, any production from underground at Gruyere will be subject, to this royalty. So therefore, extending the mine life at Gruyere beyond the current sort of open pits to underground, therefore, also impacts the value of the royalty too, not just cash flows from the project. Obviously it's a pretty good synergy for Goldfields if they acquired Gold Road, as this royalty would then get extinguished, but arguably Gold Road would likely, hey, I want some value for that.
Want to be compensated for it. Absolutely. Yeah. If I was advising Gold Road, I'd like what you do is you ask Goldfield, like if you're actually trying to advise to get a deal done, which hopefully the Gold Road board is actually trying to just maximize value, and it kind of looks like they're getting there on
Looks
that
that
front.
way, yeah.
But you want to know, you want to ask Goldfields what's your sum of the parts valuation? What are your assumptions behind the valuation you came up with? And then you try and get nitpicky about all of the different elements, and try and argue for a value uplift in certain areas. And the royalty, I reckon, would be a pretty easy win to argue an uplift, because whatever Goldfields have assumed, you would just straight away be like, well, let me just ask for indicative bids from a handful of royalty companies, and then all of a sudden you probably get like 2, 3, 4 times as much as whatever Goldfields thinks it's worth as coming as like bids from the royalty companies. Then you say, well, you better up your bid for this part of it, and then you work through the list of all those different like valuation aspects, and hopefully get towards something that is a doable deal for both parties.
Yeah, no, that's right. And just for context now, last I checked, Gold Road was trading around $3.05, which is pretty sure all-time highs, 3.3 billion market cap. So, when news of the rejected NBIO got released after market on the 24th of March, it had closed at 2.45 earlier that day, Gold Road. And the next day, in response to that news, was trading in the high twos. And at that time, the implied value of the NBIO for Gold Road was pretty much where it's trading now, $3.05. Admittedly, the $1 gold price has picked up over $200 an ounce since then as well.
Interesting, Ali. I originally thought a bit about this underground thing, and I kind of thought it was like a nothing burger, and I was thinking, by the time you like NPV back to today's terms, I mean, some of the forecasts like 2037 that it all kicks in, yada yada. And I do think like when you NPV it is going to be relatively immaterial in the context of things. And hilariously, you're NPVing something that does have low confidence, right? Exploration target. So the extent that you can really wrap a proper number around that is questionable. However,
At this stage anyway. Yeah.
Like this is a big ore body, and it's got consistency, and that sub-level caving scenario is probably possible. And Goldfields, in all likelihood, if they had 100% of it, 15 years from now, would probably be
Still going.
be milking the pig there, kind of thing. So if that is the truth of the ore body, you do want to be compensated for the upside of that too, as Gold Road right now. I'm hopeful that a deal gets done here. It'll be higher than the last bid.
Yeah, well, I guess it has to be, right, because it's sort of that's where it's trading at now. I bloody well hope so if that was to happen. But I guess
Don't you think they're just going through the classical motions, like exploration target? Come on, like
yeah.
Like,
but I think
like Azure did the same. Like,
yes,
Spartan have done one.
Yeah, I know.
Tracking out the report. This is all kind of 101.
This is the dance.
Kind of.
It is the dance. Yeah.
Absolutely.
Yeah.
And
this volatility makes it hard to get a deal done per se, but I don't think gold is going from strength to strength. Its volatility hasn't been what the broader market has been, and I'm sure Goldfields will be determined to
it's a cash
get a deal done.
Also being a cash offer too.
So strangely, the thing that actually could kill the deal is if gold rips very fast. To the because
Yeah,
then
absolutely.
because it's that then all of a sudden if you're Gold Road, it's easy to like all of a sudden heaps of your shareholders think, no, don't take that deal. You're worth way more than that offer now. So gold ripping to the upside actually pretty fast can kill the deal too.
Yeah.
For sure.
I was going to ask you guys, sort of in light of the, we've already sort of started talking about it, but the recent announcements out from Gold Road, the upcoming grey scheme vote next week in mind, how do you guys see the path forward? Do you feel now, as opposed to say 2-ish weeks ago, there's a better likelihood for a deal to be sort of revisited and recut, and perhaps everyone's had a bit of time to cool down as well?
I'm hopeful. I won't hold my breath. Like I know a lot of like historic Gold Road shareholders have been like tremendously frustrated with the lack of engagement in a corporate outcome when they think the company's been undervalued and there's been opportunities in the past. However, I think it's different this time given the public nature of it, and we've observed the evolution from like complete kind of vehement rejection to now talking about things like value, which is very positive for the optics.
Maybe we see them talk up their other exploration kind of plays next week in and around the area, and then in the meantime they're chatting and something emerges in a few weeks' time. We'll see.
Look, I think that's I think as a board you sort of have to do that, right? Maximise value for your shareholders. So
Absolutely.
it's sort of been a fascinating last couple of weeks. I'm looking forward to see what's next, and maybe there'll be something new on the table sometime soon. Who knows? But it's just fascinating sort of dynamics to watch. Very, very cool stuff.
For sure. And there is something new on the table for you to watch in the meantime, Ali. I know you did a bit of digging on MI6 or Minerals 260.
Yeah, so they're actually back on the ASX boards as at today, this morning. So they had as a refresher for those who didn't know, they had a bit of a hiatus since end of last year. They were in sort of suspension while they finalised the acquisition of the Bullabulling gold project from Norton Goldfields. They raised $220 million to sort of acquire that asset and advance it going forward. And they've recomplied with all the Chapter 1 and 2 of the ASX listing rules to get back on the boards. They raised that $220 million at 12 cents. Last I checked, it was trading around 11 cents over the course of the day so far. So there'll be plus 80,000 metres worth of drilling due to commence this month actually, and a resource update planned later this year, amongst other things. So it'll be an interesting one to follow to see what the asset will do and look like under a new team and new management, especially in this gold price, and also in a publicly listed environment as well. So
it's a lot of money to be raised for a small company. So cool to see a new undeveloped gold project on the boards, and another one to follow in time, Ali.
Absolutely.
Leverage to gold price.
No gold.
Awesome work, Ali. Got a couple partners to thank and wrap up a pretty green Thursday for most of the punters out there. Big thank you to GRX. Get your tickets, discounts in the show notes. That conference is coming up at the end of May. And a big thank you to all our awesome partners: Mineral Mining Services, Grounded, Sandvik Ground Support, CRE Insurance, K-Drill, WA Waterbores, Quattro Project Engineering, KCA Site Services, Black Diamond Drilling Services, and last but not least, Cross Boundary Energy. Hoodaroo, guys.
Hoodaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.